What's up, everybody? It's Jimmy from Trading Decoded. Everybody in the club getting crunk. Well, it's 4:07 in the afternoon, and it's March 21st. And I think today was a rough day for a lot of people. For I don't know that it's obvious reasons, but for reasons that make total sense to me. Because today was rough for me as well, but maybe not in the way that you think. I don't have a call or a put bias, but I do have a difficult time being excited about buying calls anytime we're near all-time highs. Okay, I'm not expecting the market to crash or anything like that just because we're at all-time highs. In fact, I spent most of today reminding people how strong the market is and that we should be looking for reasons to take calls, not playing puts simply because we don't agree with where the market is. Okay, so if you are a person who disagrees with the market being as strong as it is simply because the economy is really not as good as everybody or some people say that it is or think that it is, I don't disagree with you. Okay, but you have to be able to disassociate that feeling, because Wall Street and Main Street are two completely different things. We all know that personally, the economy is not so great. There are more people with multiple jobs than ever before. We have credit card debt through the roof. You know, it's bad. And it's hard to accept watching the stock market continue to push up, even though we don't feel that way in our personal lives. Okay? With that said, it's understandable to be excited about playing a stock market that's doing the opposite of what we see in our day-to-day lives. I totally get that. It's a normal thing. Okay? But if you feel that way and you know that that feeling is going to make you do something silly, like tell yourself it can't go higher. That's fine if you want to tell yourself it can't go higher and you don't take calls because of it. But it becomes really dangerous when you say that to yourself, so much so that you're going to short it every time it goes higher. That's dangerous. Okay, so today we spent a lot of time in the room trying to prevent people from falling victim to that particular feeling. Okay, today was more of a defensive day for me. I was able to eke out one trade today myself. It happened to be puts. It was a 13.9% win. And then I recognized that I was only willing to play puts in a market that wasn't telling me it was the thing to do. So fortunately, I took a lunch break, and that break away from the chart reset my mind, and no longer was interested in playing a counter trend trade. Now, when I say counter trend trade, I'm saying counter trend on the strength of the overall market. ADD was way up above 1,000 at open. Qs were running up. I mean, everything was green today. It just was. Okay. And then we didn't have a huge range until, the moves started to slide down. But even then, it wasn't at a pace that made you feel comfortable jumping into puts, and it shouldn't have, right? So let's go ahead and launch charts. Let's talk about what we were thinking and what we were seeing, especially at open, because, the call put scenario is usually where I get my best trades personally for me. And the reason I like those is because I look at it very simply like this. If I can get into the market, make the best of what it has to offer in the beginning portion of the day, I'll take my winnings and then I'll walk away with a smile on my face. Now, I don't walk away from the microphone, but I mean, I'm glad to be out of the market as soon as I can be, especially if I'm on the winning side. Okay, I don't like to expose myself to additional and unnecessary risk by sitting here staring at a chart. I almost fell victim to it myself today. Okay? Please know where your weaknesses are, guys. If you feel like you cannot play calls because it can't go higher, my suggestion would be please either wait for a very good reason to take puts, or just walk away for the day and wait for a day that starts trending down so that you feel better. Okay? But outside of that, you're going to hurt yourself. Now, today, we were pushing all-time highs leading into the open. So My put scenario was a breach, originally, was a breach below 522.90. Okay, we were hoping to get to 522.71. Okay, the call scenario, and this worked out perfectly, and I myself did not even take this trade, which I think is where the start of my frustrations on the day came. While we were getting close to the open, I told everybody, I said, guys, I don't really have a call scenario. I know what I would want to see in order to take calls, but I don't know how to chart it in the form of a line that would give everybody an understanding of, without listening to me, I can't give you a visual reference of when I would be wanting to buy calls. So here's what I'm going to tell you. I am not going to buy calls if we're up here at all-time highs, which we were in pre-market, and it starts out green. I will not do it. I don't care if that thing would have run up until higher in the stratosphere. No chance I was buying the high of day, all-time highs at the open. I said, but what I would like to see is a pullback to support. Knowing how strong the market is, I would prefer to buy calls on a pullback. And here's the caveat. I was asked, 523.25 pullback? No, not 523.25. Why not? Because it's not a tested support level. It's a tested resistance level. Look at pre-market right here, but not a tested support level. So what pullback would you be interested in? To the tested one at 522.99. And the beauty is, if you decide to buy there, we know where our put line is, which means you won't want to hold calls if we're going to use that for put reasons, 9 cents below your entry point. Like, the trade was set up so that it didn't have to cost you a lot if you were wrong. And if it worked out, what we were originally aiming for was the high from pre-market at 523.60 right here. Guys, nothing more frustrating than verbally speaking this out to 300 plus people who were in my room with me at that time and not taking the trade. I'm being honest. I didn't feel comfortable with calls today, but I felt comfortable with the idea that if we were able to pull back to a proven resistance, which was proven all through pre-market once we got above that line, that it would be the right thing to do. I just couldn't do it. I couldn't bring myself to do it. And I watched the cleanest trade of the day escape me. That's frustrating. It's frustrating. Even if you played it to our original profit target, knowing, and we talk about this, guys, as we get closer to this, is if Qs have more room to go before they hit resistance, you can try and hold on to the trade. Otherwise, take your profits. If you want to hold on, just move your stop loss up so that you can't lose money. That's it. And we made it right to our first target high of 523.99. Right there. Stopped it. Dead in its tracks, right back down. Now, originally our put scenario was this teal or this white dotted line. Okay. However, I wanted to see Qs breaking through support of pre-market midline that we made for the Qs. Now, the reason I took this trade on the breach of that line this time and not this time was because we were coming off of a lower high the second time we came down to that line. I look at that as the seller pressure starting to build, in that it's more likely to breach this line of support this time than it was this time. All right, so yes, we hadn't yet made it down to our put scenario, but because Qs were coming off a lower high and assuming that this was going to breach, honestly, being aggressive, I thought it was going to close below it. It didn't, so it got a little squirrely there for a minute, but fortunately, it came down. Now, where I started to get off the rails on this particular trade was Qs made it down to their next support, and I chose to not sell my position. I almost immediately regretted that because it held that support, started to pull back, albeit lower highs again. And then I said to myself, if I get back to where I shouldn't have gotten out the first time because the Qs hit their line, which was right here, if it comes back down there again, I'm going to get out this time. And fortunately I did, because that ended up being at that time, right back to the support that shot us back up to the high of day. Okay, so I had the opportunity to get out here with comfort. I gave up that comfort for a little while, started to regret it instantly, and then got out the next time I was given the gift to do so. However, the thing that I made sure everybody was aware of all day today is if you're looking for puts, understand that regardless of the trend of SPY today, that you're getting, it's a very strong market. So I'd still consider this a counter trend trade. And one of our rules for counter trend trades is if you're going to counter trend trade, say puts during a strong upward moving market, okay, you're going to want to take your profits at the first target support below your entry point. Okay, I don't expect counter trend trades to last forever. I don't expect that when I do decide to counter trend trade that I'm going to catch the one that it completely, rotates the entire market in the opposite direction. No, I look at it the way I perceive it, which is a quick opportunity to take a short, quick trade. Okay, yes, many times counter trend trades end up going hard in the opposite direction, and you happen to catch a lot more than what you expected. But I don't trade that way. I get in, I understand that I'm inherently being a little bit more risky, maybe even a lot more risky, playing puts in a strong market. So as a result, I'm going to respect the strength of support instead of ignoring that it exists. And when I tried to ignore it here, it almost cost me. So I got out the next time I had the chance to. That was my particular trade for today. It was only a 13.9% win. And again, I didn't get in at the top of this candle. I got in closer to the bottom of this candle. So it wasn't a huge move for me. Okay. It did allow me to reach my daily goal money-wise, which I'm averaging more than my daily goal usually. So it was hard for me to just hang it up at this point and say, this is good enough. I'm not going to take any more trades. But I was admitting all day to the folks in here, guys, even though I'm not comfortable buying calls up in this area, you should be, I'm telling you how I feel. You should not be buying puts unless you have a good reason to do it. You should be looking for reasons to take calls. Break of resistance, pulling back to support, looking for the next move up. Okay. If you would have done that today, you could have had a pretty decent day. In fact, we had quite a few people have great days today. I had an okay day. I was green, but it wasn't a great day for me. But that's because of my willingness to buy calls. All right. This video isn't about how I traded SPY. It's about how I psyched myself out of playing the cleaner moves in SPY today. This is a self-reflection video, not a helpful one for anybody else. But I also think I'm speaking to a whole bunch of people out there because I'll bet you I'm not the only one who felt this way. However, I am the only one for me, and I can only speak for myself. I'm not the only one. But if I was going to take puts, I better have a damn good reason for doing it. Okay? Now, what I wanted to use for my next reasoning for puts was Q's closing below 447.46. Okay? Now, at this point, we had closed below this line at 1107. I did not take any more trades. Okay, it did get below it, but SPY also wasn't near its put line either. So I opted to not take it. Plus SPY was very close to support anyway. Wasn't a trade that I took, and I'm glad I didn't. Okay, SPY ended up bouncing up right back up to our 423.99 target. And then it started to really slow down, to the upside and the downside. It was around this time, though, that 11:19, 20, 25, somewhere in this area, I had told everybody, because we had some people that were just holding and hoping inputs for all the reasons that I was begging them not to. I said, guys, I do believe we'll make it down to 522.26 at some point today. Don't know how long it's going to take. Now, for those of you who are in our community, you know that we talk about Steve sometimes. Steve is a mythical creature, but he seems to come through often. So I made my put holders who were holding and hoping, small positions, a promise that I would call Steve. I pick up my phone, I call Steve. I said, Steve, I've got some people who are stuck. He says to me, Jimmy, where do you want the market to go? I say 522.26. I put an alert there. You could see it right here. I set that alert right around this time of day. I said, I hung up with Steve and I tell the group, I said, guys, I don't know when it's going to happen, but Steve says he'll get us there. Now, it's a running joke, but it happens enough that it sounds funny and it works. So maybe we will it to happen. I don't know. It's just a good time we have. We try and keep it light in the trading room, guys, because if you don't, this could become a very it's stressful enough, but it can become, you get edgy. You get edgy if you can't have a good time while you're doing this. So I had that alert set down there, and we slowly started to move down. Now, we ultimately got there, and not much lower than that. You look at that. Our line was 522.26. These were my 3 targets low today. I added a 4th one just in case, because in case we got down there, we wanted to know where the next one was. She moved down. Now, I wasn't in a hurry to buy puts here either. What did we need to see to buy puts? Well, we needed to see both of the criteria that we had mentioned before be true at the same time. Well, we needed to be breaching the put line of 522.90, check, okay, at 153. Qs needed to be below 447.46, check. That would have been the setup that would have made me feel comfortable enough to take puts. Now, I don't trade this late in the day, so I didn't take this one either. But we had a whole bunch of other people who did. And again, if you're playing line to line, you got paid. The criteria here was we needed to stay below the entry candle that was old support, now acting as resistance. That needed to be the key. Otherwise, we're aiming for 522.26. You had the opportunity to get out at 522.50 while staying underneath resistance. We pull back up. Now at this point, we talk about, guys, it's a higher low. If you're in puts, please be careful. Know where you're going to get out if this thing rotates to the upside. Oftentimes, higher lows are bad for puts. And they are bad for puts because we ended up making it to that resistance and beyond it, but not by much. Thankfully, the resistance here saved you. Okay, if you got in at this candle, because we broke support, turned it into resistance, that needs to be where you're stopping out if you didn't already take profits. It held. We came back down, finally smashing into that 522.26 line where, yes, some people, including my hold and hopers from way earlier in the day, were able to get out green, which is amazing. Not the right thing to do, but that's what they accepted. That's what they wanted to do. We got there, they got out. So I'm happy for you guys who did that. For me, it was a one trade day today. I had a hard time wanting to play calls. That's a me thing, not a market thing, not a you thing. And we had a bunch of people make a lot of money on calls today. We had people make money on puts today. We had people lose just like every other day, right? So guys, be cognizant of your feelings, okay? I know that the goal is to trade emotionless, but it's impossible. It's impossible. What is not impossible, though, is to get to a point where your emotions no longer dictate how you manage your trades. That is possible. It's difficult, okay, but it's possible. And when you've gotten there, you will start to behave and trade like a robot, okay, because you will get in because your trade plan says to. You'll hold on until your trade plan says to, whether it's to the good side or the bad side. All right, so today wasn't a great market in my opinion, just for me. Yes, there was money to be made. If you didn't have a call or a put bias, or you weren't afraid to play calls because we were at all-time highs, it's just not my cup of tea. So in that situation, if you want to base your trades on technicals only, play crossover strategies, play break of support resistance, play trend lines, play other things. Okay, I play my personal style of trading, and it's not conducive when we're up at all-time highs. So if I have to take a day off from trading, I'm okay with that. So, to scrutinize somebody for not doing something that they don't feel like. Now, if I felt like uncomfortable playing calls, the one thing I needed to make very clear today was that just because I'm not comfortable buying calls doesn't mean I'm comfortable buying puts. I'm recognizing that the market is extremely strong and happy. Okay, so if I'm going to take puts, there better be justification for doing it. That's not just because I want to play puts. Okay, line up the reasoning. Ask yourself the questions. Is right here the best time to buy calls? Yes and no. How many yeses do you get from the right questions and how many no's do you get? Okay. Likewise, is this the right time to buy calls? Well, based on the way the market is right now, the answer would be no. So if you're going to take that trade, you better have more than one reason to justify it. And it still doesn't mean it's going to work. It still doesn't mean it's less risky. But it does mean that you're applying logic in applying the information that's going to make you feel more comfortable about taking that leap. Okay? I'm trying to get you guys to ask yourselves questions. Because today, perfect example, I had a guy over here saying, Jimmy, I'm thinking about buying calls. And it was right, where were we? Right here? Yeah, right around this time, 11:41. And I said, okay, pause. What about this level here is screaming to you, I need to buy calls? And the first thing I alluded to was, if you look back, the last time we were here, the market knocked us down pretty good. Okay, so that, for me, is one reason to maybe skip calls. Reason number two was, let's just say that resistance does fail. Where is the next point you're going to struggle to move higher? Okay, 12 cents above that. Then you run into the next potential resistance. And we got there, and you pulled back again. All right, so my reasoning for not playing calls above this level was because there's no room for potential move. I'm not going to take the trade because I hope resistance fails. I want to know that the next resistance doesn't exist for at least 20 cents from where I'm trying to get in. And thankfully, this gentleman didn't buy calls here because you either would have stopped out here, maybe. Would you have taken profits here? I don't know. I don't know what you're thinking at this time. I know that you were about to do something that I wouldn't do in a million years. So I can't possibly fathom how you feel good about taking profits here. If you were feeling good enough to ignore resistance, all-time highs, I'm not on the same wavelength as you. But if you're going to ask my opinion, I'll give you all the reasons why I wouldn't do something. But at the same time, I also said I would not buy puts here either because the market is too strong. Okay, my put line is way down here, and I needed two things to be below major support levels before I'd be interested in puts. We didn't get that line up, okay, until later in the day. Now, what he did do was ended up shorting the market up here at 523.99. Good for him, because how many times did we try and get above it and rejected it every time? Guys, go. If you're going to counter trend trade, go with a spot that is proven to be, makes it logical for you to try it. You know, if you wait for a pullback to 523.99 and you want to take that risk, go ahead and say, hey, I'm going to give myself a 20-cent stop loss or whatever it's going to be. But just know that if it moves beyond that point to the upside, it's probably not going to come back down from there. Fortunately, if you had a tight stop or a 10-cent or 20-cent stop, you never got stopped out of that short and you got to play this move to the downside, which I believe he did. I didn't, but it doesn't matter what I do, okay? Because remember, I don't trade anyway. But with that said, guys, just ask yourself the question from both sides of every trade. We naturally only want to ask ourselves the questions as to why we want to do what we want to do. But you ignore the reasons why you might not want to do what you think you want to do because you don't want to deny yourself a potential move that we don't know is going to happen. Right? I get that. Right? Nobody wants to talk themselves out of what they think is going to be a banger of a trade. But if there's more reasoning to skip a trade than there is to take the trade, maybe listen to the side that has the stronger argument. Is all I'm saying. All right. So with that, we're going to wrap it up. I hope you all had a fantastic day. I hope you did okay today. Personally, for me, again, it was a rough day for not just me, but several people who feel similarly to me, and that's okay. Just don't trade on those days. Okay, there is no crime against not trading. Okay, you can't lose money if you choose not to trade at a time you don't feel comfortable doing so. It's impossible. All right. At least in the market, you can lose money out of your pocket or something like that walking down the street. But, at the end of the day, it is what it is. But if you got any useful information out of this video, please like, share, and subscribe. I'd appreciate it. If you'd like to join our Discord community, where there's a link down below, we'd love to have you. And yeah, that's pretty much it. I'd say check out my website, but it hasn't changed since the day I put it up. And that's because I'm slacking over there. I'm lazy in that respect. With that said, hope you all had a fantastic day. Until tomorrow, I love you guys. See you.